Today we'll talk about how to become a better swing trader. I'll give you some tips that can apply to any trading style, day trading, swing trading, position trading, whatever you prefer, but that will make a big difference on your swing trading specifically. So we'll dive right in. Spent a long time recording the video outside because in Bangkok it's really hot when you go outside to record videos, and here in Montreal where I'm right now, it's pretty good. It's good weather. So we'll do that. I'll give you some tips here that will apply for swing traders specifically, but all kind of trader as well. And I want you to comment below and tell me which tip in this video will be the most helpful for you, the one you will apply for your own trading. I want to hear which one you want to focus on for the next week, 2 months to come. Alright, the first thing to do if you want to become a better swing trader, so define your time frame of trading. I consider it to be 1 hour chart and above to be swing trading. So it's going to be a 1 hour chart, 4 hour chart, daily, somewhere in between, a weekly. You can also do like 8 hours, 12 hours if you want to. Picking your time frame will help to reduce what we'll discuss next, which is the desire to take more trades when you swing trade. Defining your time frame is about which one you want to use for trading and which one makes sense for you. 1 hour chart will be more intense. You need more time or chart reviews to be able to trade the time frame. Weekly will be like the most extreme, where you have like very little time involvement. Once a week, you check the charts and you're good to go. So in between daily, 4 hour, or kind of halfway point. So daily, it's good where you check the charts once a day. Plenty of people make money that way in trading. Or you can do 4 hour chart, where you look at the charts every 4 hours. So you might look at your charts 4 times a day, and that can be plenty to make money. Picking your time frame also helps us with the next step, which is defining your schedule. So when are you going to look back at the chart? And you want to match this with the candle close. If you trade 4 hour chart, it will be every 4 hours. If you want to trade a 1 hour chart, it will be every 1 hour. Add maybe some specific time of the day, like maybe the US session is more important for you on a 1 hour chart than let's say the Tokyo session. Or if you look at the daily, that will be at each daily candle close. Weekly, of course, at the end of every week. Very simple. Now the reason why we define that schedule is we don't want to be at the charts all day looking for trades. We want to be able to look at the chart when we need to based on your schedule and be away when we have to not be at the chart. If you decide you're going to look at the chart every 4 hours, then you don't have to be there every 1 hour to look at the charts and your trades. That's pointless. That's a waste of time. If you are trading the daily chart, there's no point going back at the chart more than once a day, right? Then your schedule is set and it's done. You don't have to go back and look at the trades or wait for stuff to happen or look at the price evolving and stuff. That's a waste of time. You don't want to be a day trader. You want to be a swing trader in that case. Next, you want to calculate our risk of ruin. This is a very important metric. The risk of ruin, as a video on it in the past, I'll leave a link in the corner over here. Basically, what the risk of ruin is just a measure on how you're performing and how you manage risk. So every trader should have a risk of ruin of 0. So 0% chance of blowing up your account. That's the risk of ruin in a nutshell. If your risk is 1%, that 1% grows and grows and grows over time. So it's even more risk to blow up your account. You can use a simple calculator to calculate your risk of ruin based on your win rate and your average reward to risk. It's a good idea to do this first so you can know exactly what the risk per trade, and that's for your overall portfolio. Right? So if you take multiple trades, multiple strategies, and you have more drawdown risk, then you want to reduce that number. But you'd be surprised how most traders either don't risk enough on their trades, they could risk a bit more to get kind of maximize the profit, or some traders just risk plenty, like way too much on their trades. And they should reduce that to have a risk of ruin of 0%. Brent Penfold is a guy who talks about this principle a lot. I've interviewed him in the past over here. You can check it out. Brent is a really cool guy. Talks about the risk of ruin. It's the one I learned this principle from, and it's someone that you really want to learn from in terms of risk management and actually not blowing up your account in trading and staying in the game long term. Now, here's my key point that I want you to take away from this video. This is probably the most important one that most swing traders have a tough time with, and you gotta accept taking fewer trades than day traders. Now that's a tough part even for me, because I want to be able to make more money. I want to be able to take trades. I want to show them on YouTube sometimes. I want to be able to kind of show people what I do and take trades in many sessions and show I kind of understand the sessions and stuff. But sometimes taking fewer trades is better than taking more trades. Like, you are better with only a few trades a day or only a few trades a week, than having these like 10 trades a day or like big number of trades per week. And that one is tough to accept, because we want to be in the market to take more trades, we want to have better returns, we want to grow faster our account. So it's tougher to accept taking less trades, and it's tougher to accept that you might make less money than a day trader who is taking many trades a day. But at the same time, the time involvement is different. The day trader will be at the charts, take trades multiple times a day, will waste all his days, out his 8 hours on taking trades. Sometimes less, but it's still a lot more involvement than a guy who's going back every 4 hours to look at the chart and just like being very hands-off about it. So think about this and you gotta accept taking fewer trades than day traders. Because we don't just look at the returns overall, we look at the returns over the time involved. That is much bigger than a day trader trading all day, where it's like 8 hours on the chart and just taking many trades that end up being break-evens or losing. Now, here's a tip that I tell everyone who's trading for a little bit of time, like very beginners, and they say they're losing money and they're confused and they want to change strategies. The tip is very simple. Trade any strategy for at least 50 trades. 50 trades is the minimum. If you want to do 100, do 100. But every strategy you have, you go in the market, you want to trade it for at least 50 trades minimum. And that's because we want to have the stats play out. 5 trades, yeah, sure, maybe you have 4 losers. Who cares? That's just 5 trades. 10 trades, yeah, maybe you have 6 losers. You still lose money, but that's just 10 trades. Over a big sample size, big number of trades, then it gets more clear what the stats are like. Are you actually losing or winning money? It gets a bit more clear, around 50 trades. 100 trades is even better. You have a much better idea of what your win rate is. But 50 is alright. So any strategy you trade, like let's say you learn a new strategy with a course online, let's say you learn from whatever ICT or whatever you want to think about, or you learn from these smart trading concepts, which are a joke, then you want to go in the market and trade that stuff, do it for 50 trades minimum. Okay, not 5 trades and like you change strategies, not a week and you go to a different style, at least 50 trades minimum. That will, yes, for sure take more time, but it will save you a lot of headaches of trying different strategies, going back and forth, and like strategy jumping every week. Next thing I would tell every swing trader who is losing money is you gotta journal every single trade you take. And whether you like it or not, you gotta do it. You gotta put this into a journal, and we'll discuss how to do it in just a few minutes here. But ideally, you wanna keep track of this everywhere. Keep your screenshots, keep your trades, keep your data there. It doesn't have to be like crazy data, like in depth and stuff. Just a screenshot, the pair you enter, the time you enter it, what time frame, what setup you were trading, like what strategy you were trading on that pair, is enough to get good results. And whether of course it's losing or winning. That's it. The reason for this is simple, because we want to be able to go back at it and look at these trades later and see where we fall short and where we can improve. Also, if we did take trades that don't follow our plan for any reason we found out later, at least we know why we lose money and how we can flip this around and become better. From journaling will also come this really cool thing of being able to identify your weaknesses, mistakes, and your strengths. So you'll be better equipped to know where you fall short, where you do actually good things, like what are some things you're good at doing in trading, and focus more on these things. And kind of try to work on your mistakes more and reduce these mistakes over time. I always love to go back and look at my old journals. Even today, I could look back at a journal like 4 years ago in my trading, and I'll still be able to look at things I did back then and how I was good at this and how maybe now it's not so much the case, or how I could improve now. It's a good way to go back and look at it. You could do this on paper, you could do this online. I use Trello for this mostly. I'll leave a link below here in the corner on how I use this journal on Trello, if you want to check it out and do the same principle I do. But that's kind of how I keep track of my trades in a journal. It's very simple. Journaling compared to what you hear online doesn't have to be complicated. It doesn't have to be big spreadsheets with like mini lines and columns and stuff and a lot of stuff you won't use later. It can be very simple and very effective at the same time. And that video I'll link in the corner, and also I'll try to link it below. It's going to be helping for that quite a bit. Now, these are the tips that you can on your own, but I want to talk about one last thing, which is if you really want to become a good swing trader, you're going to be able to connect with other swing traders. And I say swing traders because, yeah, you connect with any trader you want, day traders, scalpers if you want to, all good. But the swing traders will be able to keep you on track with your goals. If you talk with day traders, then you want to start to day trade. If you talk with scalpers, then you might want to start to scalp and kind of be like them. But if you talk to people who are doing the same thing you want to do, then that's a lot better. That's a lot easier to manage it. So talk with other swing traders, people who do the same thing, who trade on a few hours a day. I have a few of these friends who kind of help me and push me sometimes to learn more and kind of think about different things I'm doing and how to do it better. It's a good routine to have to connect with people who are doing the same thing, having the same goals, and kind of doing it the same way you want to do it later. To do this, you can either connect with people in your city. If you can reach out to traders, that's a good idea. Or join a program. I have a pretty cool community inside of my Ultimate Platform Trading program where we kind of help people to scale their trading with platform challenges, but we also kind of focus on swing trading, helping them trade on a few hours a day. We don't have only swing traders, but we do have day traders as well. If you want to check it out, link will be below for this. Or if you want to have something free, then I have a daily trader growth email I send to my followers every single day. So it's an email where I kind of talk about different things, grow your own trading. I'm primarily myself a swing trader, so I can definitely help you with being able to learn more about swing trading. So on that email, I send basically some tips, some lessons, some things I'm doing myself, things I'm learning about to people's inbox every single day. So you can use these tips. These are very actionable, very focused on implementing different things to your own trading and becoming better. So if you want to get those emails for absolutely free, I'm not going to charge you anything for it. Link below for this, the first link, and you'll be able to sign up to this daily trader growth email. You'll also get my free Boltzmann reversal course, which is a free course for my strategy that I'm using now in the market, which you can learn, of course, like I said, for free. And I'll catch you back here in the next video pretty soon. Ciao.